Welcome to Get Rich Education. I'm your host, Keith Weinhold. The coronavirus, COVID-19, has infected humans and financial markets too. This creates both problems and opportunities for you, the investor, today on Get Rich Education. Property investors can get killed with maintenance costs. That's less likely when you buy brand new construction. Let me tell you about JWB Real Estate Capital in bustling Jacksonville, Florida. They pioneered the build-to-rent model where you can invest in new construction, turnkey rental property. That's why JWB was featured on the front page of the Wall Street Journal. To learn more and see inventory, start now at newconstructionturnkey.com. The company that's provided our listeners with more loans than anyone is Ridge Lending Group, NMLS 42056. You can finance more than 10 single families up to fourplexes. Serving most U.S. states, their knowledge and experience leads to your financial freedom. They're number one in the investment space. Pre-qualify and then chat with President Chaley Ridge personally. Start on your next investment property loan right now at ridgelendinggroup.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Uruguay to the Ukraine to the UAE to the USA and across 188 nations worldwide. This is Get Rich Education. I'm your host, Keith Weinhold. Yeah, you're back in that abundant place where your quality of life exceeds your cost of living. The novel coronavirus, COVID-19, that began in Wuhan, China in November of last year, when it transferred from animal to human, is poised to affect the economy of every world nation and every U.S. state. It's not SARS or Zika. This transmits easily, and it is perhaps 20 times more deadly than the common flu. Some experts believe it's the worst outbreak in America since the Spanish flu of 1918, and that was the worst pandemic of last century. And you know what? It didn't have to be this way with coronavirus. As my chief informant on the matter, Dr. Chris Martinson, says, it didn't have to be this way. Often placing the economy ahead of human life, health organizations and governments have done a deplorable job of handling this, often understating the threat. The World Health Organization was even reluctant to acknowledge that the coronavirus is a global pandemic, which it surely has been for a long time. Well, that's something that they only acknowledged 5 days ago. Well, now that agencies weren't preparing people sooner, see, coronavirus is poised to threaten even more people, which in turn will make the economy even worse than if the threat had just been accurately represented in the first place. So I'm going to focus on coronavirus's likely effects on real estate and the other financial markets here shortly. But let's, you and I, outline this together first. The virus causes only mild or moderate symptoms for most people, like a fever and a cough, but it can progress to a serious illness, including pneumonia, especially in older adults and people that have existing health problems. The World Health Organization says mild cases last about 2 weeks, while most patients with serious illness recover in about 3 to 6 weeks. Based on what I said earlier, consider the source there. And this is still a fast-moving situation. There's still things that we don't completely understand about it. And I've got to tell you, my heart goes out to the victims of this, past, present, and future. The most credible source that I follow thinks that the virus will reach its peak in the United States 1 to 3 months from now, and then wane from there. I've followed this story closely since January, and if you receive our Get Rich Education email newsletter, you've known for a while that my favorite source of trustworthy coronavirus information was, from day one, and still is, the Peak Prosperity YouTube channel, which Chris Martenson hosts. In fact, I've mentioned that resource in our GRE newsletter for you twice. The first time was back on February 6th. So if you get the Get Rich Education newsletter, you've had plenty of time to get in front of this. And you know, it was interesting timing. I had Chris Martenson here on the show with us earlier this year, and we talked about the Fed printing money. That was right before coronavirus literally went viral. Before I tell you about the effects on your real estate, both good and bad, let's establish a baseline here. Coronavirus is threatening because it has a substantially higher, what they call R0 value than the flu. If an R0 value for a disease is greater than 1, that means that one infected person will spread the virus to more than one person, and then the disease can propagate. Well, the way that a virus dies out is for its R0 value to then be less than 1, because then one infected person on average spreads it to fewer than one person. Well, the common flu has an R0 value of about 1.3, and coronavirus, COVID-19, is believed to have an R0 value of more than 3 and maybe even more than 6. So it spreads easily and it spreads asymptomatically, and that's bad. There's no vaccine available, and most believe it's going to take a while to develop one. And you can find resources elsewhere on how to prevent the spread, like social distancing and avoiding gatherings and lots of hand washing. But because this is an investing platform here, and it's not a show about preparation, and I don't have a degree in pathology or epidemiology, and much of what I just told you right there, I learned myself in the past month or two. So let me get into my lane now. How do I think coronavirus will affect your money and your real estate? Well, it probably already has. Businesses are closing, colleges have suspended classes, many events are being canceled or postponed. South by Southwest in Austin, Texas was one of the first major events to be canceled in the United States. We've got an entire country, Italy, that's essentially shut down. When businesses close and more people work from home, this can disrupt supply chains. That could include less supply of sheetrock or faucet handles or whatever, and that could affect value-add properties because so much building material comes from China and other places in the world. It could be a tougher time to be a flipper then if you're about to start a rehab or if you're in the middle of a rehab. If you're upgrading an apartment building, that could slow things down. You need materials. This may or may not create disruptions for turnkey property providers. We'll see. You're in a better position if you're a prospective turnkey buyer waiting for someone else to do a rehab for you. Maybe that'll create a delay until your property is ready. Maybe it won't. Keep in mind that China accounts for almost 30% of world manufacturing, but importantly, they also make component goods for finished products. So, for example, an American car can't be finished if it doesn't have the, say, battery and the exhaust system from China. Virtually every major car company has a component made in China. And now I see conflicting reports of whether some previously closed Chinese businesses have really come back online or not. We need to learn more there as time goes on. Travel, hospitality, and leisure businesses are really hurting already. Now, where hospitality meets real estate, we've got hotel rooms, bed and breakfasts, and short-term rental platforms like Airbnb and VRBO. Like I've said before, and I said it fairly recently on the show, is that these short-term rentals are not very recession resistant. They sure haven't been tested yet. See, that's because short-term rentals, they cater to two main groups of people. They cater to business travelers and they cater to vacationers. That's who occupies Airbnb-type properties. Well, what are business travelers and vacationers doing right now? They are postponing travel or canceling travel outright, left and right, due to coronavirus concerns. How great would you feel about owning Airbnbs as a major part of your portfolio right now? Probably not so great. Short-term rentals like Airbnbs are not as recession resistant as long-term rentals. Just a couple, 3 months ago, it probably sounded different to you when I mentioned then that short-term rentals aren't very recession resistant because perhaps you're still feeling good about our 11-year-long economic expansion now. But those same words, they probably sound and feel different to you, since some think that a coronavirus-induced recession could be imminent, although a recession remains to be seen. Also, expect big hits to chemicals, pharmaceuticals, and electronics. Apple Corporation is so dependent on Chinese manufacturing for their iPhone. That is some of the bad news I left you with there. Now let's talk about the good news. Mortgage interest rates have hit all-time lows. Yes, lower than their lows that they hit back in 2012, shortly after we came off of the Great Recession. All-time lows. I mean, as long as Freddie Mac has been tracking rates, which is since 1971, they've never been lower than they are now. That's the opportunity. Today, you can get a rate in the low threes for primary residences. I've even heard of a few people closing 30-year fixed amortizing loans at a mortgage interest rate of less than 3%. Like, it starts with the number 2, just astoundingly good. And of course, investor loans are often about 0.75% higher than those. The Fed has been pumping tens of billions, even hundreds of billions of dollars into the system lately for bank liquidity. The Fed's emergency interest rate cut of 0.5% 2 weeks ago is the first time we've seen a move like that since 2008. That 2008 cut was in the wake of the Great Recession. That was the Lehman Brothers emergency 0.5% cut. Just a quick economics primer if you're a new listener. Lower interest rates for loans stoke the economy because they make you more willing to borrow and spend. Interest rate cuts help the investor class like you and not poor people. That's just the truth behind who the cuts actually help. It's you. It helps the Get Rich Education listener, you again, even more because we're such strong proponents of responsible and sensible borrowing here. Now, note that lower rates, they really don't do things like help contain the disease. If your grandparent gets sick, Jerome Powell's decisions at the Fed are not going to help that, right? How low would rates have to be for you to get on a plane and travel to Wuhan, China right now, or to Italy tomorrow? By the way, after the emergency rate cut, President Trump was not satisfied with the amount of easing and cutting. More easing and cutting are the 4 words that he tweeted following the central bank's announcement. But realize, of course, that long-term mortgage rates don't move on that Fed funds rate that we've been talking about here. The Fed controls that short-term rate, although there's generally still a correlation there. Long-term mortgage rates, like the ones that you really care about for real estate, they move instead with bond yields. Now, bonds are like the boring can of beans or soup in the finance world. They're safe, they're stable. This vigorous bond buying that we've had makes bond prices go up and makes bond yields go down. So this strong bond buying, this safe haven, has dropped the 10-year Treasury note yield below 1% for the first time ever, and it's fallen substantially below 1% in just this fantastic fall, like off a table. Okay, so they're below 1%. And that's a rate that was really unthinkable just a few months ago. And now, do you know what the average spread is between this bond yield and the 30-year mortgage rate? Well, on average, mortgage interest rates hover 1.8% above this bond yield. So you can see how low we could be going. I think that the historic spread is going to widen. But despite the fact that we now have record low all-time mortgage rates, there's a good chance they'll tick even a little lower yet. This is great for your new real estate buys, of course, and refinance activity is just surging right now. But back to short-term rates, these ones that the Fed influences, more cuts there seem imminent too. In fact, the next one could happen at the Fed's regularly scheduled meeting, which happens tomorrow and the next day. And they always announce that on the second day of the meeting. So you'll hear an announcement from the Fed this Wednesday about their rate cut decision. The Fed, basically what they did a couple years ago in 2018 is they loaded up with dry powder when they raised rates a few times. And see, now that way they can lower them at a time like this when they need to help stimulate the economy. And every time they cut the rate like this, it punishes savers and it rewards borrowers. No one knows if the rate will go so low it goes negative, and only a few places in the world have those right now. Places like Japan and Denmark and Switzerland. We've never had negative interest rates in America. U.S. stock market investors are getting killed with all this uncertainty the past few weeks. Indices are whipsawing with volatility. Fear pushes stocks around easily, but real estate, not so much. The U.S. stock market dropped 3% in just a few minutes when a report came out that in California, a large number of people were exposed to coronavirus, but they weren't. Last week was the first time that major stock indices dipped into bear market territory. Bear market is defined as a 20% loss from a recent high. There was one recent trading day, just one day, where the S&P dropped 7%. That triggered a circuit breaker, which paused trading for everyone for 15 minutes. Yeah, now we're talking about all these automatic fail-safes at this point when the stock market loses so much so soon that there's a pause in trading. And by the way it works is that if the S&P had declined 13% in a day, trading would have paused another 15 minutes, 20% in a day, and everyone just goes home for the day. That's how it works. Yeah, they put these circuit breakers in place after 1987's Black Monday. That's when the market fell between 22 and 23%. Stock drops are often sickening. And if you're within 5 years of retirement, stock drops are really scary. I've told you before that I haven't owned any stock, mutual fund, or ETF since 2014, and that is still true today. Being in something stable like real estate has rarely felt as good as it has lately. And you know something? Volatility, that is a funny word. It seems like volatility used to mean something that changes rapidly, and anymore, that word has morphed into something that means a change for the worse. Warren Buffett says the stock market is a device for transferring money from the impatient to the patient. Yeah, I think that sounds about right. I believe that. I'd even say that it's not just the stock market, but that markets overall are devices for transferring money from the impatient to the patient. Real estate investors like us are more patient. There's no flash selling in real estate. It might take you 30 or 60 days or more to sell a property or to buy a property. I'd expect to see a stronger U.S. dollar because the world views it as a safe haven asset. I expect this to be a nice tailwind for real estate too, because the world views U.S. real estate as a safe haven asset in times of uncertainty. Gold should be strong with coronavirus concerns. That's pretty easy to say since gold is the classic safe haven asset. But remember that gold might not appear stronger to you if you're an American if the dollar strengthens. That's how it works, because if gold goes up 10% and the dollar also gets 10% stronger, well, then it would take just as many dollars to buy the gold. The dollar-denominated gold price would look the same then. You know, I've read in a number of places experts predicting silver prices to rise on coronavirus concerns, but then I don't see any sound rationale for them thinking this. I disagree. I would not expect silver to rise. That's because silver has more industrial use than gold, and more industrial slowdown is expected. Let's talk more about your income properties in this coronavirus environment. Though I'm speculating now and really trying to come up with some bad news, what if your tenant is required to self-quarantine at home and they lose their income? And this is not far-fetched. Washington state officials were really some of the first in the United States to recommend that workers stay at home when they suggested that Seattle area residents work from home. More and more people can work from home today than any time in modern history. But when we're talking about your tenants, it's unlikely that all of your tenants would lose substantial income. Now, there are some positions where people can't work from home so well. Think about mechanics, janitors, chefs, and wait staff. Sure, that's something we need to consider. Think about the fact that the current unemployment rate is about 3.5% in America. I'm really speculating here, but if 1 in 10 of your tenants is both laid off and without income, that's a 10% increase in unemployment. That would be huge. That would be like the unemployment rate going from 3.5% all the way up to 13.5%, which seems completely unfathomable. And yes, realize that if 1 in 10 people were laid off, it wouldn't exactly make the 3.5% unemployment rate shoot up to 13.5%. It doesn't exactly work that way with how it's calculated, but I think you get my point. If 1 in 10 of your tenants were both laid off and without employment, that would be massive. So keep that in perspective. Even 1 in 10 would be a lot. Last week, Trump floated the idea of a payroll tax cut, which I don't think would do much of anything to help, and also extending paid leave, which seems more helpful. Companies, especially those in the service sector, they are under pressure to provide paid sick leave to workers who might not be in a financial position to take time off. Walmart and McDonald's put in safeguards for their employees. Congress might step in. A bill has already been introduced that would require companies of all sizes to provide paid sick leave. So could your overall rental income go down or get dented at all? Maybe, although you have to speculate quite a bit to even think that 1 in 10 would go without any income. So that's a real maybe. But does your mortgage interest rate go down? Definitely, as long as you act. It already has. What about you? If you lose your job, you're going to need multiple income streams from places like your rentals. And if 9 out of 10 or 10 out of 10 of your tenants still have jobs, you probably still have that income stream because you have set up your life for multiple income streams here if you've been listening to this show and acting. What about you? What about your job? Well, the lower your financial freedom, the higher the risk when it comes to you and your job. The more income streams you've built, the better off you are. So when it comes to your job, the lower your financial freedom, the higher the risk. That's the way it's been even before this. Another benefit of a paid sick leave movement gaining momentum is that when people gain access to paid sick leave, the spread of the flu actually decreases. The spread of the coronavirus actually goes down because people are more likely to just go ahead and stay home then. So that makes paid sick leave seem like more of a reality. That could really take place. It's important in this situation that when you have people who have symptoms and don't feel well, that they don't go to work and spread diseases, and that helps slow the infection rate, and that helps buy time for public health officials to develop a vaccine. Let's look at oil prices because that is a substantial input to inflation, and oil is a real proxy for what's going on in the economy, and oil prices have crumbled faster than a Nature Valley granola bar. And that's even before a coronavirus-induced slowdown kicked in. What's happened is that with President Trump in the White House and the Republican Party controlling the Senate, environmental activists, they've had to shift their focus from pressuring the government over to pressuring the private sector instead. And since banks like JP Morgan are such big financiers of the fossil fuel industry, activists have really turned up the heat on them and other big banks to stop financing oil projects. That's significant. On top of a slowdown in the economy, if fewer goods need to be produced and shipped, well, that uses less energy, and then there's less demand for oil. Low oil prices are something that's generally good for consumers, but bad for producer countries and producer states. In America, low oil prices are not good for real estate in areas like West Texas and parts of Louisiana and Alaska, in places that aren't very well diversified outside of oil. But of course, there is the flip side of all this, because at some point, low stock and oil prices mean that bargain hunters come in to float the market again at some point. In fact, billionaire investor Sam Zell, he recently made remarks that oil looks like a real buy low opportunity. So let's look at the bottom line. Real estate is still quite well positioned as long as you're in residential long-term rentals that you bought for cash flow, Elsewhere, bonds win, gold wins, the US dollar wins. Many business sectors, like the ones I mentioned, lose, stocks lose, oil loses, and silver loses. And of course, let me qualify all that by telling you that that's my outlook and that we don't really have any recent precedent for anything else like the coronavirus. So no one really knows. That's my take. If you happen to be a new listener to the show, you may not know too much about me. I have authored many written articles for both Forbes and the Rich Dad Advisors. Business Insider recently wrote 2 stories about me and Get Rich Education and how I've helped everyday people create financial freedom through real estate investing. That's what I do here. I'm a current member of the Forbes Real Estate Council, but maybe the more important things I can tell you are that I've been the host of this show every week, and I mean every week, continuously since 2014. You can count on me to keep showing up here. I own 3 real estate trademarks. In 2017, I authored an international best-selling book on how real estate makes ordinary people wealthy. And perhaps the most important thing I can tell you is that I invest right alongside you from the exact same providers that we talk about here. Though I travel pretty well, I've lived my entire life in the United States, dividing this life of mine between 2 states, Pennsylvania and Alaska. I have spent the last 2.5 weeks visiting 4 countries. I'm back in the U.S. today, but I was in the United Arab Emirates, Oman, India, and Sri Lanka. Though I'm a real estate guy, I have a degree in geography, so I like to travel. One of the coolest things I did is sandboarding on a sand dune in the Arabian Desert at night there in the United Arab Emirates. I could not find another interested person, so I did that activity all by myself. Going high in the world's tallest building, the Burj Khalifa in Dubai, that was a must while we were there. Muscat, Oman has some surprisingly beautiful sites and souks and buildings and mosques that we toured, really clean looking there in the Arabian nation of Oman. Immersing myself in Indian culture is something that was so novel to me, and that's really the main reason I wanted to go to this part of the world. The Indian food, the way that, especially the women in India, in some of these outlying provinces we were in, like Goa and Kerala, India, the way the women dress in these colorful outfits, and they even wear them if they're just walking to the market to buy some fruit. Such an exotic feeling there. The coolest thing I did is actually visiting the world's largest slum. It's called Dharavi, and it's in Mumbai, India. It's just so different from my world. You might wonder why a person would want to spend a vacation day or 2 in a slum, but it's because I just haven't seen anything quite like that up close before. I've been in some slums in Manila and Bangkok and places like that, but I never took an in-depth tour of one. And there are actually bustling little businesses inside the slums there, from plastic recycling to pottery. And the Indian people were so welcoming, even in the slums, which was just amazing to me. As I like to say, seeing poverty enriched me. I've got more on coronavirus and your money straight ahead. A fair bit of what I've discussed here about coronavirus and your money and your real estate is material that I sent to our wealth building Get Rich Education newsletter subscribers about 12 days ago. The newsletter is a nice written supplement to the show here. Of course, you can unsubscribe anytime, but very few do. My wealth building newsletter is something that you can subscribe to for free. I would love to have you as a subscriber. You can do that at GetRichEducation.com. You'll be glad you did. You're listening to Get Rich Education.
Since 2014, the powerful Get Rich Education podcast has created more passive income for people than nearly any other show in the world. This show teaches you how to earn strong returns from passive real estate investing in the best markets without losing your time being a flipper or landlord. Show host Keith Weinhold writes for both Forbes and Rich Dad Advisors and delivers a new show every week. Since 2014, there's been millions of listener downloads in 188 world nations. He has A-list show guests include top-selling personal finance author Robert Kiyosaki. Get Rich Education can be heard on every podcast platform, plus it has its own dedicated Apple and Android listener phone apps. Build wealth on the go with the Get Rich Education podcast. Sign up now for the Get Rich Education podcast or visit GetRichEducation.com.
Finally, with Total Control Financial, get checkbook control of your existing 401k and IRA funds to invest in real estate. Yes, you can move your retirement money into your own checking account, but you must avoid the little-known tax that you'll get hammered with in a self-directed IRA. Instead, start your QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000.
This is Peak Prosperity's Chris Martinson. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Hey, you're inside Get Rich Education. Welcome back. I'm your host, Keith Weinhold. It's unknown whether coronavirus will tilt the economy into a recession or not. It's too soon to know. I'll keep you updated on that here, of course. For you, I think it helps to listen to a perspective that's invested through a recession before. I've been investing directly in real estate since 2002, which was before the Great Recession. I made a major income property purchase in 2007, which was just within that recession. In fact, I mentioned that. That was a fourplex purchase I made. I talked about that on last week's show. And I kept buying in 2010. And as the recession wound down, I was still buying in 2012 and right up to the current day. Well, what's the common thread here? It's that I continued to prosper because I bought for cash flow first. It's that I bought in multiple geographic markets for diversification, which is a recession-resilient strategy. Residential rentals that were leased to long-term tenants. People need a place to live. And as long as they're alive, a virus is not going to change that. But see, a virus might mean people stop using vacation rentals and stop taking business trips and stop going to the mall and stop going to the office to work. But we're talking about homes here. Well, we could soon have more people working from home, not office, not retail, not short-term rentals. Those things all look vulnerable now. And by the way, this doesn't mean I'm a perma-bear on those asset types. There's always opportunity, but recession resistance just is not one of their qualities. I'm not saying short-term rentals never make an ounce of sense or anything like that. Some companies are basically using the coronavirus as this experiment for that moment when working remotely could broadly replace working in person. Some people think that time is coming. And this can accelerate what you're seeing, the work from home movement. As people get more and more used to using workflow software and using platforms like Slack or Trello from home because they have to, well, you know, when coronavirus passes, and it will, some might ask, now, why return back to an office at all? With each passing day, the camp of people believing that this is fear-mongering with this virus, that camp loses troops. We'll see if that peak for coronavirus will be 1 to 3 months from now, like some experts predict. That's the latest I've heard from credible sources, but again, we don't really know. That's why I like to focus on things that we do know. So let's focus on what we do know now. We know that the coronavirus threat will pass sometime. We just don't know when, but it will pass. A second thing we know is that people will continue to need a home, a place to live. And thirdly, we do know that mortgage interest rates have hit their lowest level in American history. So with those being the things that we do know, this can be quite an opportunity to not only lock up investment property buys at historically low rates, but potentially do that cash out refinance of your existing home if you think that's in your best interest. Procrastinators aren't often rewarded in life, but hey, maybe this time you are with rates being this low, or maybe you really weren't because you had debt equity accumulated in one place for too long. So with borrowing rates being underneath the basement, a lot of homeowners are racing to lock in cheaper loans. I think we could see low to mid 3% rates on investment properties and below 3% on primary residences. They could get that low. Mortgage refinancing applications have more than doubled in volume from the same time last year. That's what the Mortgage Bankers Association recently said. and industry records are being shattered. Bloomberg reported that the country's number one mortgage lender, Quicken Loans, recently had its busiest day for mortgage applications in its 35-year history. United Wholesale Mortgage approved a single-day record of $2.5 billion worth of loans. Yes, in one day. These stories are all over the place. The thing is, to process this flood of applications, you're going to need a lot of people. So the mortgage industry has been on a hiring spree to take advantage of this gold rush. Our preferred mortgage provider is doing a lot of volume right now as well. RidgeLendingGroup.com. That's RIDGE. Just calculate your return on investment from principal reduction alone at these low rates, and it can look pretty remarkable. I think the thing that you need to remember is that long-term thinking. Keep in mind that investing should not be about a moment, but it should be about a process over time. Some of the classic obstacles with getting started in real estate or getting more real estate are ones that I've really helped solve for you here. I think the problem one for people is that they feel like it costs a small fortune to get started. Problem two is finding that first property or finding that next property. And oftentimes it's because properties in your area where you live don't make sense with your 20% down payment and 80% loan. I've really helped solve both of these problems by selecting investor advantage markets. With down payment and closing costs, you can get started with as low as about $18,000, and they're in areas where the numbers make sense, and they are all at the website, greturnkey.com. In fact, at the top of the page there's that 8-step flow chart where I walk you through the process. You start by getting pre-approved for a mortgage, I even suggest where, and then reading an investor due diligence report, all the way through to viewing properties, making an offer, getting your third-party inspection, appraisal, signing your management agreement, closing on the property, and then the really good part, years of owning and collecting the rent. It's rarely been easier, though the process still takes some time, and you need to supply your mortgage loan underwriter with plenty of documentation. That's all outlined at the same place where I buy my property myself, greturnkey.com. And what about some current highlights over there? Well, it's a great time to invest in Florida for a lot of reasons. You'll find providers in Tampa, Orlando, and Jacksonville. Our Orlando provider was recently added, and they have new construction, yes, newly built, never before occupied, single-family homes and duplexes, and they're in locations from Florida's Space Coast to the Villages through Greater Orlando and nearly out to Tampa. We've got another new provider on the page if you're looking for more cash flow and less appreciation than what you typically get on new construction, and that is in Iowa. Yes, I'm proud to introduce the Des Moines, Iowa market to you today. It's a model of Midwestern stability, and Des Moines has an MSA population of 600 to 700,000 people. Des Moines has seen an average 3.6% appreciation over the last 20 years. I think of Des Moines as a cash flow market. Now, a lot of times you might be buying property today, say for a 4 or 6 or 8 or maybe 10% cash on cash return. If you have a little more patience and you want to potentially double your cash on cash return, then rather than the turnkey model, where I was just talking about it in those markets, the turnkey model is where you buy a property that's already renovated. Instead, you might prefer the BRRRR model. That stands for buy, renovate, rent, refinance, and recycle model, recycling your money to reuse in a short period of time. That BRRRR model is suited to Baltimore, Maryland, within commuter distance to Washington, D.C., at just a fraction of the price of most comparable D.C. properties. All those markets, including the new turnkey markets with inventory today in Orlando and Des Moines, plus the Baltimore BRRRR market, plus that 8-step flow chart that helps serve as a roadmap for you, all in one convenient place. They're all on one page at greturnkey.com. Market uncertainty is a short-term phenomena, but when you lock up these lowest mortgage interest rates in American history, they can last you 30 years. When the dust settles from any current news, you know what? You're still going to have your mortgage rate. Stay safe. Enjoy these historically low mortgage rates. I sure am. Take action at greturnkey.com. I'm Keith Weinhold, and I'll be back next week to help you build your wealth. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.